Watch this video before market opens on Thursday. Watch it. Because today, look, I haven't been live streaming this week. I just wasn't in the mood to do it. I did watch the market. I did watch it every day this week. I had some other stuff to do, and I was part of the Discord as well. If you want to join the Discord, link is in the description to the OBR Discord. Some great guys in there, some great trades, and some good analysis. But all that aside, check out the other links too. Just like Stay Hard, the TMF Apparel, USA, all the merch, etc., etc. Now, let's get down to business. If you're watching this, it's because you want to know what's going on with the stock market and you don't know. And honestly, I'm going to break it down for you in a way that I don't kind of see happening. And that is with just real current information and news. And we're going to take the technicals and we're going to put those to the side a minute. And I'm going to tell you why. Because technical analysis works when the market operates nominally, right? When we don't have strange occurrences like ridiculous sell-offs and crazy earnings reports and FOMC meetings and all of these things, right? And if you don't know what those things are or what they are relevant to, definitely don't trade this week because you're going to get absolutely wrecked. Let's switch over here to the stocks update to our Webull. If you like Webull, there's a link for that as well down there in the description. And this is today's 5-minute charts on a few stocks here that I have pulled up. And we're going to go through probably about 6 of them. And we're going to talk about what happened today, what's probably going to happen tomorrow and Thursday based on, well, what's happening in the world. We're going to start with SPY, which is the S&P 500. We can also look at SPX. The charts are going to look pretty much the same. Now, going into today, we were pretty high up yesterday. You know, we had a nice little sell-off and a bounce and whatever, and it was what we call theta burn in the options world. And if you don't know what that is, don't trade options because theta is the winner every single time, right? So today, I had a plan going into this trade day, which is FOMC days are very volatile. What that means is the market is going to react the second the Fed minutes come out, and it's going to react even more crazy the second Jerome Powell takes his seat in front of the camera. That's what we see on FOMC pretty much every single time. So what does that mean for the contracts? Well, that means that the options contracts are juiced. They are way more expensive than they should be because the implied volatility of what's going to happen in the market is really high. So on an average day, SPY, SPX implied volatility is somewhere around maybe the 25 to 30% range. Today, those contracts were sitting at like 60 to 70%, right? And as soon as the volatile moment happens, the implied volatility drops, the contracts get cut in half just based on the implied volatility move. So you can get absolutely destroyed going into the Fed meeting, right? The Fed meeting, the minutes came out at 2 o'clock, which is right here on the chart. And if we zoom into that, you can see we had a pretty nice little move. What I did and what I advised people in the Discord to do, because we played FOMC now for the last year, I've been playing FOMC meetings and watching them. And basically, it's a straight up gamble going into this. You can buy a call thinking it's going to spike way up. You can buy a put thinking it's going to sell off because the news is bad or whatever they're talking about is going to be to the downside. And what ends up happening is they come out. I'm going to go to the 1 minute. We're going to zoom over here and I'll show you what ends up happening. Right? And so at 2 o'clock, the Fed minutes come out. Right? The market makers and these big institutions take a, what I would assume is a 1 second look at it, make a crazy rash decision, right? So we saw it spike way up. So if you're in a call option for a stock like SPY or any of these other ones, and it could be sitting here at, let's just say $1 a contract, so $100. And on this initial move, right, this 1 minute, bam, spikes up, spikes down. That right there move is $1 on SPY, which could translate to 30, 40 cents on your contract, up or down, right? Up 30, down 70. Back to here. But now what's happened is the volatility has gone down and your contract isn't really worth what it was, maybe a little bit lower. Then it spikes up here and you get to a high, right? Boom, volatility's high as shit. Way up there, your contract goes from say $1 down to 70. Now it's 120, 130, and you're thinking, oh my God, we're going to the moon, except not. Because then what happens is we get a big wick down, we get selling pressure, and then it balanced out, right? This is an overreaction to something that has just happened, and it's just kind of settling in. What that does to your contract over this time frame is it absolutely destroys it, right? So now your dollar contract is at the same price it was, the same stock price it was when you had it before the meeting, but now it's only worth like 60 cents, 70 cents, right? And now it just gets theta crushed until we have something else come out because the volatility drops, time decay, and so now you're down, right? And then what we saw today was a big move to the upside as soon as Jerome Powell, I mean, literally to the minute Jerome Powell comes out and starts talking, and we saw SPY just run up, and we saw all these other stocks that you can see here, Facebook, Tesla, Apple, all of them just went sky high, right? So how did I take the FOMC today and different to other days, other times that I played it? Quite simple. I picked the contracts that I was looking at prior to the FOMC, which today was 400 SPY calls. I predicted SPY was going to go to 400. And I didn't know that it would stay there, but I thought it would definitely go there. I watched them going into the meeting. They ran into the meeting about 90 cents a contract. I wanted to buy them at about 50 cents a contract, right? And that's where my entry point wanted to be for this trade. I wanted it to spike way up, come all the way down, about 50 cents, fill the order, ride it back up to where I'm already in profit, maybe 60, 65 cents, maybe 70, and then ride it up from there. We could put a stop back down at like 50 or 45 cents. If it does decide to go to the downside, stops out, you lose $5 on the trade, not a big deal. The upside potential was a lot more profitable, right? The risk to reward ratio was much better. So we're not playing the move going into it. We're playing the move after it has settled down, and then we rode it up. And that was the play that we took today. We saw those contracts go from 50 cents to about $2.50 toward the end of the day. Some volatility there. We saw SPX contracts go from like $2 to 15. I didn't play SPX today because the trade was just, it's late in the day. Jerome talks for like 30 to 40 minutes. And throughout that time frame, anything's possible. I didn't want to get absolutely wrecked being that far out the money. The SPX contracts were also trading at twice their normal value. So I wanted to stay definitely away from that. So that's how I traded that going into it. Now let's talk about tomorrow and what all this means. SPY is sitting at 448 cents currently, right? Going into tomorrow. We had a little bit of a pullback here, which I'm going to say is likely due to Facebook earnings. Now, what did we have yesterday? Why did I think SPY is going to go to 400? Yesterday we had Google earnings, we had Microsoft earnings, and both of them did extremely well. They were both up like 4% pre-market, which is a big move on two of the largest stocks in the S&P 500. So what does that mean? That means that the S&P is automatically going to increase because the S&P, the SPY, the SPX, all of that is the average price of all of these stocks. You take all the stocks and all the equities and you put it all together and divide it by the overall market share. That's what those stocks are, right? SPY is just the ETF version, so it's less. SPX is the actual index. So if we look at SPX as to what it's actually trading at, we're at 40.23 currently. A wild move from open today. Open was at 39.51, so almost $100 move on that. And if you go from the previous day's close, it's even more ridiculous, right? I mean, it's absolutely insane how much we saw SPX go up. But that's what's happening there. So take this information. Market opens. We had a rally on Tesla because all of big tech is going to react to whatever these other big tech companies did. We had Tesla earnings a week ago. It did well. We had Microsoft, Google. We had another one up there. Amazon's coming up. So the sentiment in the market is positive, right? These big companies are doing well, so everything else kind of rides the boat with it. We don't really see usually stocks deviate too far away from one another. Now, what does that mean for Thursday? Thursday, well, Facebook had earnings, and I expected Facebook to shit the bed. I don't expect them to be positive in revenue for a few reasons, right? Platform overall usage has decreased. They've also started paying out creators. People don't run as many ads. So they're spending money that they didn't used to spend, and they're intaking less money than normal, and the usage is down. First time this is happening in probably Facebook history. So I expected a sell-off, right? And we did get a sell-off. If we look here on Meta, 169 down to 161, 4.6%. Not the biggest move that we've seen in stock earnings, but on a company the size of Facebook, it's a pretty significant hit. So what happens going into tomorrow? Tomorrow we have Apple earnings. Now, Meta, Facebook is tied to Microsoft, right? They are heavily attached to one another. So as we see in the after hours, Microsoft is down about 0.25%, which is to be expected. Tesla came down a little bit. Everything came down just a little bit after hours. Now, if Facebook continues to sell off in the pre-market, which I suspect we'll see it bounce around a little bit, probably open somewhere between 4 and 6% down in pre-market, we're going to bring SPY back down to probably that 398 range. Now, going through tomorrow, we're probably most likely going to see Apple open red and continue up green going into its expected earnings call and its guidance. Based off the backs of the other tech companies, with Amazon coming up, we know Amazon's going to crush earnings. They always do. Everyone buys on Amazon. Amazon is a money printer. So, that being said, Microsoft and Meta are going to take the market down in the morning. Guidance on Apple is going to take it up throughout the day, and we're going to trade within a range. That means if you are extremely bullish and you think, well, SPY is at 448 and it opens at, let's just say 399 or something like that, and you think, oh, SPY is going to go to 408 or 410, likely not going to happen. Likely we're going to see an intraday move that's probably $2 to $3 up and down, and we're going to end somewhere kind of relative flat. Apple's going to keep it from really tanking. If Apple earnings are bad and Apple opens red and it gives some off and sells off after hours, SPY will likely be back to the 390 range. Amazon has earnings. They're probably going to crush it. Stock will move, not significantly, but it will move, in the probably 125 range, something like that. And we'll see the S&P stay range bound. If we look at the daily right here, pull it up on the daily, we're going to say it stay range bound in this area right here. If I can draw a little box around it, let's see, we can draw a rectangle and we will be range bound right within this area right here, right? That's going to be the earnings area. Now, we get past this week, we get through the end of the week, and people are bullish going into the future because the Fed came out, 0.75 basis point hike, expected. We already kind of knew that. Jerome Powell has said it. Apple came out a week ago, said that they were not going to hiring, or not going to continue hiring, they're going to pause hiring. Google came out a week ago, said the same thing. Those stocks sold off on that news already. It's priced in. The basis point hike is already priced in. It's unlikely that we see sentiment flush. What Jerome Powell said today, make no mistake about it, what he said was not good news. It was people are spending less money, companies aren't doing so well, but somehow unemployment is the lowest it's been in 40 years, which is most likely a fictional tale. And we want to get inflation down to back to 2.0%. And right now we're on track for like 2.25%, which means there's going to be more rate hikes, et cetera, in order for us to get down it. So I expect we see SPY continue to trade within this channel, meaning if you're going long, you're probably going to get burned because theta is going to kill you and we're not going to see these crazy moves. Now, if we want to take this off of here and forget all of the outliers, the FOMC meeting, the big earnings plays, all of these things, and just look at the chart, right? We just look at the technicals, and I don't want to do this because we have too many outliers. But we can say right here that SPY broke the downtrend, okay? And the resistance that we've been seeing has turned into support. But also, that means that we can come back down and touch this line. We do not yet have enough information to make this line valid, right? And I'll make this line green because it's going to the upside. We do not, I repeat, have enough information. We have not passed enough time to determine that that's where it's going to go. And if we want to get, all crazy with it, we can say, oh, well, we're going to draw a wedge. We're in a rising wedge. We don't have enough information to make that assumption. We can back out and we can always find a pattern that suits the narrative. We can look on the weekly and go, well, on the weekly now, we broke it, we're above it. We do not yet have enough information. This is all pre-Biden, pre-2022 run up, and then we have post-2022, right? The reality of it all. So when we look at this is on the daily time frame, and we can make whatever lines we want that help suit the narrative and go, all right, well, if we come all the way back to here and we draw it, we had a solid reversal. Let me just move that thing, right? We broke above that. We came back down. We touched it, which means this line of resistance is again support, bounced off of it again, and we're going up, which also would indicate, again, on a technical level, that we will see it also come back down off of this and retest this line, which puts us way low, down in the 340 range. So how far down does it go? All going to be relevant to what we have coming up. Now, look at the time frame it is in the year. We are going into schools going back in session. We are going into holidays. We have a lot of things happening. Summer is coming to an end. We're going to have earnings reports and travel updates and all of these things. All of this stuff is legitimately going to be bad news. However, we go into the holidays, spending goes up, more jobs. People are doing holiday jobs, picking up second jobs, et cetera, et cetera. We could see this hold on a little bit longer and maybe get a little reversal. But going into tomorrow, be careful out there, man, because everything that you think is happening can be rug pulled in an instant. There were plenty of people today in the Discord playing this to the downside. They got destroyed on that move. Literally destroyed on that move. And if you look at all the things happening with the companies that are in the S&P, it's really a no-brainer as to why we went to 400. Why should we stay there? Also seems like a no-brainer, but it's not going to happen. Friday is going to be kind of, we have earnings in the morning on Friday, and then there's nothing after market. So I think Friday will be a real test of who's willing to hold and who's really bullish on the market. So let's see what happens. I will kick off the live stream. I do have things to do tomorrow, so I won't be able to sit here full time, but I will patch in the Discord maybe. And hopefully I can sit here Friday and we can watch this entire prediction unfold. Till then, see you later.